Okay, Recons video on Thursday, the 7th of April 2022. It's just gone 7:57 p.m. Chicago time. Do hope you are doing well. So, quick intro video before attaching two day trades from today's activity. I want to talk about three things quickly. The first one is stops and what I'm doing these days in terms of using trailing stops instead of profit targets. Number two, I want to talk about the triple setup that we saw today on the 15-minute chart. And number three, I want to talk about we are moving into a massive under the lip pattern for all of the indices, and I just want to show you that on my charts. So today was a little bit of a ratty day on the way down, and then we finally caught, we kept on lurching down and having our triple signals kind of go off. But finally the bottom kind of came in, because it was a triple on the 15-minute chart. I'll show you that in a second. But it led to this really nice trending move to the upside. I took two trades during this whole move. In at this point here, in at 51, out at 69 after the blue professional bars kind of came in. And then when we didn't get a correction and a break of Better Pro Am trailing stop, I re-entered at 71 and was out at 9.5 up here because the whole time I trailed my stop. Now, if you've been with Emini-Watch for any period of time, you'll have known that in the good old days, I used to use a 4-point target and a 4-point stop. And that is just lunacy these days. But I'm going to show you why that used to make sense and no longer does. I'm going to show you the range chart that calculates the kind of most common ranges that we see. And back in the early days, let's go back to, let's say, kind of 2011 here. You can see we've got various kind of spiking days. This is the absolute range during the day, high to low, printed in red on this chart down below. And then we kind of divide it up into three buckets so that you get a third of the days above the blue line, a third of the days below the lower blue line, and a third of the days in the middle here. And you can see back 10 years ago we had ranges in the order of kind of 10 to 20 points a day. And that's when the 4-point stop and the 4-point target made plenty of sense, because it was 40% or 20%, 20 to 40% of the daily range. It was a nice little target. In the meantime, what has happened is two things have happened. One is the ranges and the volatility on the Emini have quadrupled. They've kind of gone up by a factor of 4 to 5, and certainly in the last couple of years they've been extraordinary kind of days. I mean, we've got peaking here above 200 points. But the kind of highs and lows here that you can see, we're talking about 50 to 80 points on average at the kind of those break points. So we've gone from 10 to 20 points to 50 to 80 points. So it's a move of something like 4 times the volatility. Now the cost of doing business has also gone up that much, so the margin to trade in the mini contract has also kind of gone up, I think probably by about a factor of 4. That kind of makes sense. And so CME adjusts its margin requirements based on volatility. So in terms of the return that we're getting on the capital employed, it's sticking to the same kind of numbers, but we need to ratchet up those profit targets. I'm not using absolute profit targets these days. I really like the simplicity of trailing the Better Pro Am stop. The beauty of the Better Pro Am stop is it only moves up when we have blue professional bars, because professionals kind of leg in and leg out of positions, and it'll keep you right and only get you out when there is kind of an excess amount of professional activity. And today's activity, we trailed it right into the close, and the exit here was at 9.5. Although the trailing stop was at 9.25, I got some positive move on the fill, which was nice to have. But there we go. So that's kind of my view on stops, and we're just, I don't know, the word is blessed, but we're lucky. The Emini these days is just trending really nicely. We have big moves, big trending moves once they kind of get going, and today was a perfect kind of example of that. Yes, difficult trading in the morning as it kind of lurched down, but finally when that signal kind of came in, it was away to the races. So now, why was that level down here absolutely key, the 44.50? It was a triple signal on the 15-minute chart here. I'm going to show you that here. So I'm attached on the 2-day trades kind of later in this video, so you can hear me kind of talk about this. Pullback to end of trend on the lowest time frame, syncing up with a pullback in an uptrend on the highest time frame, the thick line here, and then the intermediate time frame, same thing. Big things happen at triples. If that had broken to the downside, we would have had a big downtrending day, kind of continue down, but no, it held. And we started to rally from there. So what we're doing on the 15-minute chart is putting in a really nice kind of pullback to end of trend pattern. If we go up a time frame, so multiply by 3, we go to the 45-minute chart. Here we go. That's that pullback in an uptrend. That's on the highest time frame on the 15-minute chart is the intermediate time frame on the 45-minute chart. Everything is showing red, and we're putting in pullback to end of trend. We've got a little time to run there. You can see the cross that we've got going on. We're going to have some resistance at some point that we're going to have to break through, but we're putting in that pullback to end of trend pattern on the 45-minute chart, and then when you look at it on the 135-minute chart, slightly different. We've actually had this pullback level print a little bit early. It's difficult to get, time frames when you're calculating cyclical activity, cyclical energy to match up exactly. So this one should be kind of down here, as we've seen in this chart. And in this chart, that pullback level there should be kind of down here, and what we're doing is we're playing out a pullback to end of trend on the 135-minute chart, lowest time frame, that'll sit underneath this resistance on the highest time frame. And at that point, I think we're in a really interesting position, because we are putting in a massive pullback to end of trend on the intermediate time frame. Finally did all of that on the E-mini. I've talked about it. I think the NASDAQ was maybe the one that signaled the earliest, but we finally put in the pullback to end of trend. After all of this weakness that we've had at the beginning of the year, this has just been a retracement all the way back, and this is the moment of truth where we're coming up to the pullback to end of trend, and it is a massive under the lip pattern on all of these charts. So this is the daily chart of the E-mini. You can see there's the triple signal that we had at the beginning of the year, and we've retraced all the way back, and that is a sign of weakness that we've got. It's an under the lip pattern. It's when this is a bit complicated, but this is when the intermediate time frame comes back and makes a resistance once we've had a break of Better Pro Am, and it's coming back, and that is an under the lip pattern. And so we start breaking the lows of the last couple of days, and that will signal that we're going to kind of look at 4,000 on the way down. But it's not just the E-mini on the daily chart. It doesn't show when you look at the continuous contract at ES, but it does at ES.D. It also shows the same pattern on the futures on the NASDAQ. There we go, bang. That's the kind of under the lip pattern there. And on the Russell, same thing. The Russell's been the weakest of the lot. There it is there, under the lip. And the Dow, same thing, but we in this case are looking at the ETF, not the futures contract. We got that same signal there. So the next couple of days, as we're coming back up to make this pattern on the 15-minute chart, pull back to end of trend, and sitting under 4,600 and so on. Oh my God, this is absolutely key. If that fails, that will be the entry of the year for the move on the downside, because it'll be confirmation that we've gone back up. I'll just show you this one again, that we've gone back up to test into those highs. We've had our exhaustion buy, bearish divergence, flush, blue professional bars. They kind of force it back up. If you like, this is almost like a killing fields pattern. They've done this on the NASDAQ. I think we can see. No, it doesn't really show it on the NASDAQ on this chart, on the futures chart. But in my mind, it's like a forcing back up into this zone, and we break kind of continuation of this downtrend. And well, it'll be interesting to see where that goes. So it's going to be an interesting couple of days as we come back into that testing kind of area. Yeah, and Friday into Monday. So we'll see. Anyway, so there we go. Bit of a discussion on stops, trailing stops versus targets for trading. the importance of triples, and when they kind of come together, big things happen at triples. And lastly, we've got these massive under the lip signals all going off on the indices. Anyway, I'll attach the couple of day trades to show using the trailing stop, and yeah, I hope your trading is going well. Okay, recording this video Thursday the 7th of April 2022, just gone midday, it's 12:01 p.m. Chicago time, just gone long 51 even on the Emini. Been trying to find a bottom all morning for this. We've had a whole bunch of signals on the 500 tip bar chart. The open was kind of over here. We had weakness, it was a ratty kind of overnight session up and down, but weakness kind of all morning, and each time we kind of come into these lows we've got signals going on. So I was just waiting and waiting. What I like about this particular one, we've got an exhaustion buy signal kind of getting the move going after we kind of run out of juice here. This is good, so we're up to 55s. So we get a double signal here on the 500 tip bar chart, 1500 tip bar chart. Here's the overnight kind of sell off. We kind of rally and then sell off into the open. So it's not had a triple signal yet here, but the other thing I'm looking at the moment is the 15-minute chart, and on this one we got a triple on better sine wave, and big things happen at triples. We got a pullback to end of trend. We got on the lowest time frame, we got intermediate time frames here, and we also, this is pullback support in an uptrend on the highest time frame. So that's a little triple, and you can see it's all happening around this kind of 50, 52, 54 level kind of here. So that's interesting for a rally over the next day and a half. And you know, the last move up was kind of weak amateur up bars, blue professional down bars here. Got a little bit of bullish divergence going on there. Okay, we're up at 58s. That's nice. So finally, looks like this one might be the move that has caught in this downtrend. That is going, there we go, another exhaustion buy pattern kind of getting this thing going. So let's hold on, see where this thing goes. Alright, my target's at 69. We've just had an exhaustion pattern with bearish divergence. So hopefully I'll get taken out on this next little push up. Bunch of blue professional bars here with this exhaustion pattern. It's just the first leg. So and on the 1500 tip bar chart, a whole bunch of blue professional bars. Come on, there we go. Order filled somehow at 69 on that one, in at 51. So that was nice for 18. And we're just gonna wait and see what happens. So we've gone up to 70. Not worried about that. Just it's kind of keeping going. It's just because of this pattern here with these blue professional bars. We'll wait for the next kind of retrace and see if we can, if it's worth continuation of this uptrend, because that pattern seems to be holding. But I think there's just a little bit of profit taking kind of going on here. So let's wait and see what happens next. Okay, just gone long again, 71 even, because we are hanging around, not breaking supports here on the Better Pro Am. Here we go, we just had another sign of strength signal. Arrow trend kind of comes in when we've got a change in trend. Ooh, nice, good, so we're breaking out. So I think on the 15-minute chart this area is shown to be absolutely key. We're kind of heading up, and no kind of cross in sight on the lowest time frame here, so that's kind of good. And well, if we get through the 4500 psychologically, that's a really important level. So let's see, that's maybe where we're gonna have a look at this. So more blue professional bars coming in at those highs. Exhaustion buy, yeah. Alright, so let's keep holding, see what the next level is where we're going to kind of take profits. Alright, there we go, out at 9.5. Trailed my stop all the way up and just got taken out here. I think the Stop was sitting at 9 and actually 9.25, something like that, and on the fill I got 9.5, which is good. So in at 71 on the second leg, just around here, and out at 9.5. So that last one was for 38.5, which is very nice. The first one was for 18, out in at 51 and out at 69, kind of here to here. So not a bad day. Where are we going with this? If you look on the 15-minute chart, we've kind of held these levels, and we're in for a little bit of resistance. We got the lowest time frame, the 15-minute time frame, likely to signal around here, but a break up through there will take us into a confirmed trend, and we've broken through the trailing stop on Pro Am. That was sitting at the 4,500 level. This whole thing is playing out as a pullback to end of trend on this time frame to test back up into these levels, and we're under the lip when we look at the kind of higher time frames. So it's a push back up to test a big under the lip pattern. So we shall see over the next few days whether that ends up being a really significant kind of turning point. But anyway, there we go. That's today's activity, kind of lurching down, bang, 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 finally broke into this uptrend where everything kind of came together for this triple signal here on the 15-minute chart. And yeah, done.